The other technique that I use and look at when I'm trading is the support and resistance lines. And I actually use the Pro Trend lines that are available just in the IG Advanced charts. And they can be turned off with these two buttons up here in the toolbar. And they plot either horizontal support and resistance and also oblique support and resistance lines, also known as trend lines. And you can see when I turn them on, these various red and green lines will appear on the charts. And they're quite useful for timing your entries and identifying areas where the price is likely to either stop rising or stop falling, possibly turn, just general areas of support and resistance that apply during the day. So for example, if we look at yesterday, this is 30-minute chart, so we've got various candles and all the activity from yesterday, and you can see we've got a falling support line there and a horizontal support line there at 5662. We've also got quite a strong resistance line at 5714. So what we can do there, they're plotted before the price gets to those levels, and we can use them to try and help us predict what the price is going to do. So for example, we were rising up here yesterday morning, and it was fairly certain that we would probably have a bit of resistance at around the 5717 level, something like that, around here, 5714. And sure enough, we did. We spiked a little bit above it because of the news. There was actually a big news release at that time at midday, some rate cutting and quantitative easing news. We also had on this candle slightly later at 12:45 the ECB rate decision, so that's why they got a bit volatile there. However, the key thing to note is that the support and resistance lines still played a part, even though those news items were spiking the price all over the place. So we shorted around about here at 5714. In this case, we had quite a wide stop just to take account of the spikes, and sure enough, the price did indeed fall. And it fell all the way down to our support area here at 5662, which is where we closed and took our profit. So we knew that was going to be quite good support for two reasons. One, it was the bottom of this falling trend line, so there was support from that, but also there was support from the horizontal support area there as well. So two areas of support, both on the same price, and as you can see, the price fell, hit it perfectly, and then bounced right back again to this red resistance level here. So purely by playing the touches of these support and resistance lines, there's a good opportunity to make some profit here, and some good pips. Equally, if you'd have gone long there, you could have closed the long at this point and actually gone short if you wanted to, and you can see the price did fall away over the next hour and a half before rallying back a bit. So these support and resistance lines, they're auto plotted for you based on various algorithms and things like that, but they're all calculated and they're in your advanced charts for you, and I strongly recommend having them on. They're very useful. I use them quite a lot. And they apply on all sorts of time frames as well. So if we just zoom out to say a daily chart, for the big picture you can see we've got some quite good channels here. So on this particular chart you can see we're just testing the top of a falling resistance line there, which goes all the way back to the 7th of February this year, 2012. So one would expect this rally that we've had from down here at 5,100 to probably start running out of steam now. We're hitting quite a few resistance levels. Using our EMA strategy, which is in the other video, you can see that we're still bullish, but that's been quite a good run over nearly a month, so it's not going to last forever. Equally, if we do drop off of that support, that resistance level at 5730-ish around this area, you would expect it to fall down and probably find support off of this green trend line here, so 5,390, something like that. So we're on a daily chart here, so we'd be looking at a longer time frame trade rather than one that's off, say, a 30-minute chart, which we would probably hold for hours. If we do trade off the daily chart, we'd probably hold that for a few days, possibly a couple of weeks, something like that. Just going back and just quickly mentioning the EMA strategy, you can again see that that applies even on the daily. You can see where the 10 EMA has crossed the 25 EMA, identified the trade, Price has retested the 10 EMA and then carried on falling down. There's a great example there. For example, the cross occurred on the 4th of May 2012. Price did indeed fall, but did actually retrace all the way back to the 10 EMA at 5663 and then carried on falling all the way down to a low of 5223. So potentially over 400 points there, just from the cross alerting you to the trade, price retracing to the 10 EMA and getting you into the trade, holding it for a week or two and banking 400 pips. Okay, so that EMA technique in conjunction with the support and resistance lines works very well, and you can see that we had a rising support line there which identified the area to probably take the profit from that short trade.